Tens of thousands of games, hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Well, here we are. Hello and welcome to another episode of Next in Depth, where today I'm going to be taking a little bit of a temperature check on the investment side of the iGaming industry in 2025. We're just over halfway through the year. I want to talk a little bit about where we've been so far, where we're going for the rest of the year, and what to expect from the future. Now, luckily, I'm in very, very capable and safe hands today, as I'm joined by my very special guest. He is a co-founder of RB Capital and a general partner at Yolo Investments. And I'm sure he wears many, many other hats besides those as well. It is, of course, the uniquely insightful Mr. Julian Buhagiar. Julian, thank you very much for being with me today. How are you?
Surprisingly overworked. For what essentially should be the silly season. It's been a very busy period, which I'm guessing is good on a number of fronts, Connor, if that makes sense.
Yes, well, they always say if you want something done, ask a busy person, and that's why I thought I would come to you, Julian, to talk about exactly this topic, which is all about where we're at in terms of investment at the moment in the sector.
Yep.
What investors are looking at, what they've given up on, what their hopes are for this year. So I want to start with your view on the kind of space in general. How would you describe this year so far in terms of investment? Are we kind of super bullish at the moment? Is there loads of money pouring all over the place? Are people pulling back at all? Are we on a plateau? What do you make of the general landscape?
It's an interesting question. I think the first thing to say is we're better off this time now than we were this time last year. There's slowly more sentiment, more positive sentiment coming in on a few sectors, not all. And we'll probably expand on that in a bit. But there's generally more bullishness among investors, which normally means valuations go up, which normally means there tends to be more optimism in terms of either investment and M&A. We're not out of the woods yet, let's be clear. I think there's a lot of let's say small bumps in the road, some big ones actually. But I think in general, yeah, let's call it selective growth. I think there's a few very interesting areas which are now slowing uptick. Investor funds are showing more bullishness. I think 2025 as a vintage year will probably end up to be all right if you're picking funds. So yeah, it's a very generic term to say. Yeah, I think we're looking better now than we were a year ago, and especially 2 years ago. If that makes sense, Connor.
Yeah, absolutely. We saw, a lot of cooling off. I think, yeah, looking especially back to 2023 was a kind of slightly, what would you say, slightly fearful time. Everything was everyone was a bit hunkered down. And what do you think's changed since then? Is this a macro change or is it sector specific?
No, I think it's macro. I think it's macro. There's been a few things happening in capitalist markets which have actually helped, I think, sentiment drive up. I think gaming in particular is also uniquely bullish in that regards. There's more regulation happening. There's more IPOs. So in general, that normally means that people are happier to commit capital to new or growing assets. So I think it's a combination of macro and gaming focus, if that makes sense.
Yeah. Well, thinking about the sector specifically, I feel like I feel like over the last 5 years, let's say, there's been an accelerated period of change in gaming. We've kind of had whole new verticals crop up. We've had dozens of different buzzwords and topics kind of come and go, and some of them are here to stay, it seems, and some of them have kind of fallen by the wayside.
Yeah.
So in terms of where you would say smart money's going right now, what do you think people are actually focusing on in terms of specific areas?
Well, I think there's a few usual assessments. There's a few interesting surprises. I think the smart money is focusing a lot on regtech and tech around compliance. It's the boring stuff, right? But the boring stuff normally helps move bricks and mortar and unblock pipes. But importantly, it creates something called value as opposed to revenue. So when you frame a business in terms not of the revenue it generates, part of the revenue it saves, right? Purely because it uses regtech. That all of a sudden changes the fundamentals of any solution that actually helps you with that solution, right? So IBM went through this about a decade ago when it started to acquire a lot of businesses that weren't necessarily helping its top line, but were optimizing its bottom line, right? So value creation, I think value saving is something which regtech does a lot. So there's some very interesting focus on this at the moment. And that's to be expected, right? So if you look at all the increased requirements coming across areas, like even like Curacao these days, right, where you need to have different sets of AML KYCs. But even looking at how Brazil, for instance, has stepped up its testing, right? So anything in the RegTech, anything in the compliance sector, that's normally smart money, right? It's not necessarily going to be a 10x in 1 year. But if you average it out for a period of a fund, right? So as an investor, you typically look for at least 3 to 5 years investments, right? The investment horizon, so to speak. Then you'd probably be looking with pressure because it's the boring stuff that will never go away, and then everybody will need, right? Bit like antivirus in the mid-90s when everybody had to pay to get antivirus on the system. Think of RegTech similar to that, if that makes sense. So that's the one side. But then the interesting stuff, right, is crypto. So I would never have associated crypto with a term that's the regulated entities would use, right? But if you even see what the likes of Supergroup have announced last week, right, that they see regulated territories like Africa needing crypto because fiat is so hard to get in. Actually, say something which obviously I have a bias because I see a lot of crypto-based assets these days, but it gives me pleasure to see, right, that there's big entities, right, regulated entities in regulated markets ready to embrace the on rails, the on ramp requirements that crypto can provide that normal cash and fiat currencies cannot. That is an interesting surprise and probably a trend we should watch in the coming months, so to speak.
Yeah, I think it's a really positive thing for the crypto sector to see this practical application coming into play and see the markets where that's actually it's no longer a kind of nice to have, it's becoming a requirement because that's
Yeah.
the way that people move money there. So yeah, I think there's obviously going to be a lot of upside there. Just going back to the regtech question, it seems like it seems obvious when you point it out, it's that kind of value add rather than necessarily revenue add. Inside gaming businesses, do you see other significant areas for cost optimization with things like regtech? Would marketing tech be another? Are there other areas where companies are going to try and kind of stop bleed from spending too much on these things?
I think Martech's going to be the next avenue, and it's mainly because the saturated markets or the rapidly saturating markets. Brazil again is a great example of this. Right, will actually need a lot of Martech optimization, even just to stay afloat, let alone to actually be in the top 10, 15 operators. Right. So you're gonna be seeing a lot of that. The automation isn't necessarily there, but now thanks to especially the latest generation of AI, that actually will start to improve what effectively is what we call the Martech optimization cycle, right? So if you can see any tech behind Martech that effectively uses AI to optimize the A/B testing, the generation of specific affiliate, I don't know, grooming, for instance, right? Which we know there are a lot of issues in any operator life cycle. But then even looking at campaigns, what's more effective? How can you actually use social media, right, more effectively? Which ones are not being used? Where are you playing influencers too much? You can see there's a whole sphere, right, which right now is only really targeted by a few niche companies to do niche tasks. But you can easily see how Martech can actually has an opening, right, for the next big optimization effort, right, as a software, right, to be able to make this happen. I'll put my money on that.
Yeah, nice. And then the other side of this equation, of course, is where are people not putting their money anymore? First, I want to think in broad industry terms. Do you think fewer people are investing in, say, legacy brands, operators, and big kind of monolith suppliers?
It's a good question. Look, I think the term supplier, even that has changed quite a lot over the last few months, especially years. I think even if you look at the different requirements of an operator within different markets because of the demographics they serve, right? Even that in itself has changed. So yeah, big monolithic suppliers will definitely have changed, and that is a part of it is because it's the nature of the supply chain of suppliers, right? They go through this life cycle curve where they become the most important thing, and then the smaller kids start to eat their lunch, so they have to diversify or acquire. So we're going through that right now with suppliers. But I think there's a lot of very interesting things happening specifically within gaming, right? The way if you look at new brands, right, particularly those that are more Web3 savvy, right? The way they use tokens, for instance, to acquire, right, the latest generation of degens. That itself, right? We're talking about completely different market, which needs completely different suppliers, but actually needs completely different metrics to analyze performance, right? So you can see a completely different generation happening of the entire supply chain being revisited. So yeah, I absolutely agree with you there. It's definitely something which creates new opportunity for new money to go into these different sectors. But then if you look at the wider sphere, right? So where wouldn't you put money on? I would definitely not put money on sweeps, right? Or anything to do with sweepstakes in the US. It's been something which, to be fair, I've been chanting perhaps monotonically for the last 2 years anyway. It was only a matter of time before the tribes and the feds start to create rules to go around. And we still see pockets, right? I still see maybe 1 to 2 decks a week, right? Promoting sweepstakes, right? Is the next big thing, which normally means that actually probably the end is nigh. But I think also anything that just uses buzzwords such as AI or tokenization, right, or anything inside a specific generic brand, right, that is normally always a turnoff. So yeah, I think those trends are slowly going down in favor of more brand specific opportunities. So I'm going to launch a casino, for instance, and this casino is going to specifically target this generation with this demographic, with this kind of brand, with this kind of loyalty scheme. That actually means that it's no longer the one thing, right? It's also a complete vertical stack brand that does all of these things, but it does it in a new way. That actually is quite exciting.
Nice. And going back to the kind of Web3 question and this new generation of users and the creation of a new, almost a completely separate supply chain here, what do you think is the kind of risk reward sort of profile of looking at opportunities like that?
As with all things new, the first wave, we're actually probably between the second and the third wave in Web3, but the first waves tend to be incredibly risky, right? And probably more on the black side of gray than the white side, if you understand what I mean. So typically, it would only really attract investment from very specific pockets, right? And we are still waiting for a Web3 to killer brand that the majority of legacy gaming brands really fully embraced as a competitive threat. Right now, Web3 is still being looked at as an afterthought, or maybe it's looked at just as a buzzword. But the reality is, if you really look deep inside what great Web3 tech looks like, it's actually the ability to use their own currency to be able to create their own games and their own loyalty that the players keep on coming back for, as opposed to being using once just as a novelty. That in itself is still so generationally specific right now that it's not affecting the launches of the big players, especially the public ones. That in itself would probably change in the next year and a half. I think when we next have this next summer, we're talking about the trend. We'll probably be talking about the first major acquisition of let's call it a legacy Web2 brand of a Web3 operator. But we are at least 12 months away from that.
And what kind of companies would be a target in an acquisition like that?
Oh, no,
No,
it's fancy.
maybe you don't want to name names, but maybe a few characteristics of the kind of company that might be a target.
I can tell you what they target, right? So I can tell you what they look for. They would be looking for specific targeting of a demographic that is as yet untapped. I think that's the first thing. The second thing would be that it would have to go and pass the necessary KYC and AML checks that a normal brand would have to go for. But C, also, it would have to be probably under a regulated jurisdiction that would actually pass muster with the acquirers. So I think even in that alone, there's a few steps, right, that still needs to happen. But I can easily see, right, that some of the more avant-garde public brands out there, the ones that release their quarterly earnings, so to speak, some of the more brave ones, the ones that have always been had first mover advantage, you probably start looking for these smaller Web3 operators to be able to see what sort of beneficial effect they can acquire to their revenue, but also what they can cross-sell. And I expect that to happen quite soon.
Yeah. Well, you heard it here first. That's one to watch out for, and I'll refer back to you when it finally happens. I guess this question is kind of, it could easily be tied up with this question of demographics and user bases as well, because we've already mentioned Africa and the importance of crypto in some of the markets there. But geographically speaking, if you're looking across the world for investment opportunities, are there particular areas where you would say that's a high growth potential market that I would want to look at as an investor?
Yeah, look, there's two things you'd look for high growth potential. You wouldn't just look at markets, but you'd look at trends, right? So one of the trends that's happened in the last few years, we were there at the right time, so we saw this happening at the very beginning, so we got in early, right? So operators like Dabble, right, that come out of regulated entities like Australia, which we already know are, let's call them, highly savvy, highly prone focused gambling markets. If they can create a significant amount of interest, right, and by interest we actually mean then GGR and then GR, right? Then you probably know that that can be translated with relatively low effort to other regulated markets, right? So we've been backing Dabble now for probably better part of 5 years, and since then it's grown from what essentially was just a niche underperformer in Australia to one of the biggest brands out there, right? And Tabcorp subsequently invested in them. Then they went to the US and actually conquered the US there. And a few weeks ago they launched in the UK, and easily been one of the best challenger brands out there. Even just looking first on the App Store, right? The sports app is actually having Dabble as one of the top ranking apps over there. But even seeing that it's clearly tapping into new requirements, but also new needs, right? Of a nascent generation of gamblers, right? That we couldn't actually tap into before. So I think that is more from a product perspective, right? How do you do this? How can you create virality with a social community that wants to continue instigating, right? And wants to continue sharing bet slips, wants to continue sharing tips. That in itself is a rising trend that permeates markets. But then if you look at a market specific, right, opportunity, everybody's been talking about LATAM, and I think the biggest problem is that LATAM is overused as a term, because there are markets in LATAM which shouldn't be touched right now because they're already oversaturated. They have acquisition ratios which surpass far that of European markets. Whereas then if you look at underplayed markets, right, and there are a few in Latin America which aren't necessarily fully regulated yet, but you can see the bubbling under. That would definitely be a market. I go back to Africa. I think Africa is a massive opportunity, particularly where there clearly have been gaming routes previously set. The regulation is probably not at its fullest maturity, probably issues with payments as well. But then if you find a solution, right, that can permeate the three of them, then you're probably onto some winning start. And you should probably do it before all the 150 other brands around the world that are competing for some leading edge come there. I think that's the biggest interesting emerging trend that's come out probably in the last 36 months, that no longer do you have first mover advantage and that first mover stays there happily for the next 12 months unencumbered. Now everybody moves, right? Because everybody's looking for the next gold rush. Everybody's looking for the next ore. So I think we're going to end up with closely guarded secrets by private brands sitting on a specific product or a specific territory, trying to maximize as much as possible before the secret comes out. We saw that in Portugal. We then saw that in Brazil. We're now seeing that in Peru, for instance. Colombia is a very similar follower as well. So it's equal to, there's going to be other pockets of this, initially Latin, but there are also others gradually happening, let's say elsewhere in the world, where we're going to be starting to see very slow and then very quick exponential curves of brands looking to acquire. I'm really sorry not to be able to give you more specific info, but you could probably understand that there are specific targets which we're looking at from a fund perspective because we see growth potential there. And then all of a sudden, everybody will jump on, and then everyone will say, "Oh yeah, we were there first, you guys, didn't you know?"
Yeah, no, it's a super dynamic market at the moment. It does seem like companies are willing to just move at the drop of a hat and try and jump in on something. And but I think what's good about that, you're right, is that there is no that first mover advantage doesn't count for the same as what it used to. There is a huge amount of competition, and we talk about challenger brands like Dabble who are able to kind of build market share very, very quickly by doing something a little bit different. And of course, we don't know who's going to enter the market next. What I wonder, kind of zooming out a little bit and leaning on your long experience in this market, or in this sector, I should say, I wonder how you approach judging kind of whether an emerging trend is something that's going to be here to stay or whether it's a bit of a flash in the pan.
It's funny because, as you know, I wear a few different hats in this regard. The seller in me tries to create as much hype as possible because clearly the more investment there is, the more hype there is, the more valuation comes out of it, right? Which makes everybody happier in the short term. But then the cynic in me, right, as a GP on a fund says, actually, hang on, what are we seeing here? Are we seeing another NFT based hype, which we actually want to run a mile from? Is this something which is clearly going to go away? Is this another sweeps? And I think first off, if you always go back to the founders and the gap that they are supposed or they are claiming to solve. If you see that and you genuinely see that this is validated from not just themselves but from another of other key investors who've come in, having backed similar disruptors in the past, then an element of FOMO kicks in, right? So that happens the more often than you think. Our investment circles are actually quite small, not just in gaming, but everywhere, right? So nowadays, if there's a fund that's committed early onto a specific asset, all of a sudden everybody knows about that. So we want to understand why. We want to understand what makes that tick. And that's a good thing because it helps validate it as a sounding board across all investors. But I think in terms of concepts, new concepts, how does this work? Well, how did they make their first dollar, first of all? Right? And is that scalable? Did it have to take a lot of marketing dollars to make that first dollar? Because if so, that probably is a no in the first place. If on the other hand, it seems to be something that was a great example again. It tends to be viral. So the way you effectively are acquiring another member from one current member is cheap or virtually free, then you normally know you're onto something good. And similar tech exists out there, right? Or a similar form of re-engagement works out there with other forms of startups. If you understand that the acquisition chain is normally relatively cheap, then probably it's a good way to investigate further. And then, as you know, right, the founders play a very important part, hence the so-called no ticket policy. If they tend to be meek, if they tend to be underassuming, but importantly, they tend to listen and want to grow, that normally tends to be a good recipe for growth because then, when there's, let's call it problematic situations, they tend to think with their head versus with their emotions. And you'd be surprised how often that has happened across the lifetime of an investment in a fund.
Yes, I can imagine the no dickhead policy comes in very handy when it comes to identifying investments. And I wonder, kind of zooming out from this even further, we've talked about what might happen over the next year or 18 months. You've given us a couple of your predictions. What if we think about the next 5 to 10 years? It's an incredibly difficult time to predict what's going to happen. Some people will tell you none of us is going to have a job because AI is going to be doing absolutely everything in 10 years. What's your take? What would be the pillars of your investment thesis, let's say, over the next 10 years?
Well, look, a few are tried and tested, right? I generally think crypto is going to be much more permeated as a payment channel. I think the biggest issue, the misunderstanding of crypto is people think it targets a different demographic and it targets a different market. The truth is, it isn't. If you look at it at its most basic, it's another payment mechanism. And if you see this as a payment mechanism, then things start to become much clearer in terms of how you use it. We back a few very interesting companies like Mesh, for instance, reduces the friction, right, for on-ramping, but importantly for user transactions. If you can reduce the friction inside the user journey, right, so your UX is effectively much better, even just through a payment mechanism, then you're probably onto something good, because that's one of the major grievances of many players felt there nowadays. So I think crypto will make a much bigger permeation, right? I think that much is important, and it will be adopted by the big legacy operators, so to speak. That's the first thing. The second thing is I genuinely think that we are witnessing the rise of Web3 as a gambling product. I think it's been flirted with in the past. Nobody's really embraced it properly. There are a few challenger brands out there that are really doing a good job, we think. We are backing a few of them as well. And I genuinely think with a little bit of pushing, I genuinely see an acquisition happening in the next 12 months, which will then start to make everybody think about Web3, not just as a fad or as a hyped brand, but something to genuinely start thinking about. And that in itself will start to change the supply chain, as we discussed. That won't happen over 12 months, but it will happen over 3 to 5 years. And then I think AI plays a part in terms, not necessarily of making anyone in the gaming sector redundant. I think we're far away from that. I think affiliates have a challenge, let's be honest about it. I think particularly those that heavily rely on content generation, because I genuinely think AI has done a brilliant job of automating that significantly, which means that biggest challenge for affiliates down the line will be, how are they going to compete with much more efficient, much more content rich AI generated boards. And there are ways around that, but that's probably for another podcast, because that probably takes too long. But then I see AI making some really interesting inroads into what the content is presented to you. How does that content evolve over time? How does the RTP evolve over time as well, right? So you can see gradually, thanks to AI as an underpowered technology. If you go to one specific brand, one specific skin, and two players go to that skin, that's going to be very different for each of those two players, even 3 days after they've started playing, which in essence is the gold, the holy grail, the gold standard of any operator today. How can I maximize not just the eyeball, but also the duration of that eyeball, specifically on the brand? I generally think that's what AI is going to be doing. And I think there'll be some good tech that will help us do that and effectively maximize the player-enriched experience on a specific brand. That is 3 to 5 years away from now. Beyond 5 years, I'd love to be able to tell you, but it's just like saying Bitcoin is going to go up to $200,000 or back to 20, right? It's speculative. I've learned enough in funds to know that take the investment horizon, work gradually and iterative towards that investment horizon, return a decent amount of returns back to your investors, and they'll all be happy, if that makes sense.
It makes perfect sense. It makes absolutely perfect sense, Julian. And if I may, I'll round off with one more question, because I feel like sometimes in our sector, we're a little bit insular, and we always seem to see the same faces, and you know, once you're in gaming, you never get out and all that. It's like the Hotel California. But do you think there are misconceptions about gaming that are keeping other investors out of the sector? And do you think that's changing at all? Are we getting more people in from outside now?
Yeah, it's a really interesting question. Had you asked me this a year ago, I would have said, yeah, we're still in the dark. It's still taboo. But I think what private equity has done specifically over the last 12 months has really started to change the external perception, right? And why private equity? Private equity brings big money that's never typically touched, especially online based gaming, apart from a few exceptions. I think private equity is slowly starting to realize that the next edge does lie in gambling, does lie in the periphery of gambling and fintech. And if they tap onto that, then that actually becomes a validation point for more cautious investors to also get either behind the fund that the private equity creates, or indeed start taking some moves themselves. And this happens in every sector, right? So typically, it's always the investors with the big pockets and the ones that make the biggest moves to take the first move that then encourage the rest to come. And I think what's happened over the last 12 months, both with private equity leading IPOs, but also private equity leading sales, that's something which gaming hasn't really touched recently. And thanks to that, I think it's going to bring a lot more money into the sector. I'm not necessarily sure if a lot more money into the sector is a good thing, that be clear, because it might give us another, what I call capital fueled boom, right? Which will bring a lot of noise, bring a lot more hype to these decks, give people like myself a lot more headaches trying to sift what really is tangible as opposed to a buzzword, because that's what happens when you have free floating capital around, which is what happened at the start of COVID. But it's definitely going to create much more interest for sure. So yeah, watch this space.
Yeah. Well, there you go. For all you cynics out there, there's plenty of runway left to go, plenty more to explore in this dynamic and exciting sector of the industry. Julian, I really appreciate you taking the time out of your very busy schedule. Even though it's summer, there's no rest for the wicked. I know you've got lots on your plate. So thank you for being with me today. We'll leave it there. And of course, thanks also to everyone out there for watching and listening. Julian, final word from you.
Yes, watch the space. There's a lot of exciting brands out there. There's a lot of exciting businesses to either invest or acquire. I'm either at the rising edge or the tail edge of some of them. So I'll probably be speaking to a lot of you very shortly too.
There you have it. Thanks very much, and we'll see you again soon.
Thank you, Connor.